Welcome to Manager's EDU. Today, I will teach you the fixed asset turnover ratio. I will explain this with a deep concept and clear examples. So, let's begin. Fixed asset turnover ratio measures how efficiently a company uses its investment in fixed assets, such as property, plant, equipment, vehicles, and so on, to generate sales. If the result of the fixed asset turnover ratio is higher, it is a good sign for the company. It means the company is using its fixed assets efficiently to produce revenue. If the ratio is lower, it is not a good sign because it indicates that the company is not utilizing its fixed assets effectively to generate sales. Now, let's move to the formula. Fixed asset turnover ratio equals net sales divided by average fixed assets. And what is average fixed assets? It is calculated as average fixed assets equals beginning fixed assets plus ending fixed assets divided by 2. Let's explain this with an example. Suppose for the year 2023, we have the following information for a company called ABC. Beginning fixed assets, $500,000. Ending fixed assets, $600,000. Net sales for the year, $2 million. First, we need to calculate average fixed assets. So, beginning fixed assets, $500,000, plus ending fixed assets, $600,000, equals $11 lakh. Now, divide that by 2. So, $11 lakh divided by 2 equals $550,000. Now we apply the fixed asset turnover ratio formula. Net sales, $2 million, divided by average fixed assets, $550,000, equals 3.64. So, the fixed asset turnover ratio in this example is 3.64. Now, let's understand what 3.64 means. For company ABC, the fixed assets include things like buildings, plant, equipment, and vehicles. If we consider all these fixed assets together as a single unit, the ratio of 3.64 tells us that for every $1 invested in fixed assets, the company generated $3.64 in net sales during the year 2023. In simple words, it shows the relationship between total fixed assets and the sales generated from using those assets. So we can compare this ratio year by year to see in which year the company performed better in generating sales relative to its fixed assets. That's all about the fixed asset turnover ratio. If you didn't fully understand it yet, you can watch this video again to grasp it well. Thanks for watching.